It's an AI-dominated world now, and NVIDIA's chips are leading the way, yet most people still know the company for its gaming chips. On today's Stocks in Translation, we're going to show you how the money engine at the world's largest company by market cap has shifted and why it matters for investors. First, a quick visual on NVIDIA's data center, which is basically its AI business versus its gaming business. First, let's focus on the left, which covers the data center. It's a warehouse of network servers that run apps and AI, and its products are AI chips and systems for the cloud. Who's buying them? Amazon, Microsoft, Google, plus other large tech companies. They're scooping them up so they can offer AI services for businesses and even to the public sometimes at scale. On the right side, we have gaming. Think GeForce PC graphics and Nintendo console chips. And everyone from PC gamers to PC makers, both retail and online, are still paying up for these premium graphics chips. Fueling the buying spree are big game releases and new launches of the gaming chips themselves. And now let's show how big each of these two markets really are, as of NVIDIA's last quarter ending in late July. That top bar here shows NVIDIA's revenue or sales for its data center business, $41 to $42 billion. And you're going to quickly notice how much smaller that bar underneath is, just $4 billion. That's the gaming business, which is only a tenth of the AI business, not a subtle difference at all. And how did we get here? AI native companies, those built around AI from day one, they are scaling real revenue exponentially. Listen to
Earlier this year, the leader in artificial intelligence was valued at $4 trillion. Its growth is still remarkable, and NVIDIA anticipates growth of more than 50% in the current quarter. Despite its high valuation, a premium seems reasonable considering how successful NVIDIA's business is. With a market valuation of almost $4.1 trillion, NVIDIA is the most valuable corporation in the world. Whenever it encounters difficulties, the stock manages to rise. Investors were alarmed to learn early this year about DeepSeek R1, a low-cost AI model created in China. The company's stock price eventually fell as a result of this, casting doubt on the need for significant expenditures in NVIDIA's next-generation chips. Then, in early April, there were worries about tariffs, which caused the stock to drop to below $100, its lowest point of the year. Nevertheless, NVIDIA's stock has consistently shown itself to be durable and has increased in value. To reach yet another milestone, a $5 trillion market cap, it would need to increase by an additional 22%. Does NVIDIA have any obstacles in the way of its advancement, or will it eventually achieve that threshold? Demand for NVIDIA's state-of-the-art AI chips remained high after the company released its most recent profit figures last week. Its revenue for the period ending July 27th was $46.7 billion, a 56% year-over-year increase. That was somewhat better than the little over $46 billion that analysts had predicted. Additionally, adjusted per-share earnings of $1.05 exceeded projections of $1. NVIDIA still anticipates a growth rate of 50% for the current quarter, which is the most promising aspect of the outlook for investors. Even though it is slowing down, that is still a very amazing growth rate for a company the size of NVIDIA. Despite having a large revenue base, NVIDIA is clearly providing strong growth, as evidenced by its most recent results. Long-term tailwinds for the stock will continue to be the enormous expenditure on AI data centers anticipated and the possible entry into the Chinese market. NVIDIA became the biggest corporation in the world thanks to its consistent dominance of the artificial intelligence, AI, chip market. The AI boom has caused its share price to rise dramatically over the last 3 years, bringing its market capitalization to slightly over $4.1 trillion. With the release of OpenAI's ChatGPT in November 2022, the AI frenzy swept the globe over 3 years ago. NVIDIA's A100 data center graphics processing units, GPUs, served as the foundation for the chatbot. Since then, there has been no turning back for NVIDIA. 3 years later, a $1,000 investment in the stock is worth over $12,000. However, in anticipation of more gains over the following 3 years, investors might now be questioning whether it would be wise to purchase $1,000 worth of NVIDIA stock today. To try to address that question, let's examine the company's prospects in more detail. Despite challenges in China, NVIDIA once again exceeded expectations when it announced its fiscal 2026 second quarter earnings for the 3 months ended July 27th. The semiconductor giant's adjusted earnings increased by the same amount as its revenue, which jumped 56% year over year to $46.7 billion. Despite not having any sales to Chinese consumers, NVIDIA managed to record such remarkable growth. Furthermore, any possible revenue from China is not included in the company's sales projection of $54 billion for the current quarter, which indicates a 54% year-over-year rise. Since NVIDIA has apparently reached an agreement with the U.S. government to split 15% of its profits from sales of AI chips to that country, the country is obviously still a viable market for the company. Since the H20 isn't as powerful as the company's top chips, this likely explains why CEO Jensen Huang suggests that NVIDIA should start selling its flagship Blackwell processors in China instead. Huang notes that it believes China presents a $50 billion revenue opportunity this year that could eventually increase at a 50% yearly pace. Therefore, the company will have a strong catalyst that will allow it to maintain excellent growth levels if it is able to regain access to this market. The good news is that NVIDIA's business outside of China is still expanding at an amazing rate, which is why it reported strong growth in the most recent quarter. As you are aware, the capital expenditures of just the top 4 hyperscalers have doubled in the last 2 years, Huang said during the most recent earnings conference call. The annual capital expenditure has risen to $600 billion since the AI revolution got underway and the AI race began. 5 years remain until the end of the decade, and the top 4 hyperscalers alone account for $600 billion. Crucially, NVIDIA claims that its revenue potential is a staggering $35 billion for a typical gigawatt data center, which is estimated to cost $50 billion to build. According to McKinsey, under ideal circumstances, the electricity capacity of data centers worldwide might increase from 55 gigawatts GW in 2023 to 171 GWs in 2030. By the end of the decade, 298 GW of data center capacity may be required according to the top end of McKinsey's prediction. Thus, governments and hyperscalers around the world might keep spending more on data center construction. According to McKinsey, data center infrastructure is expected to cost an astounding $6.7 trillion over the next 5 years. AI data centers will receive $5.2 trillion of that total. According to McKinsey, technology designers and developers that create chips and computer hardware for data centers will receive 60% of the investment in AI data centers. Therefore, it may be said that NVIDIA has a $3 trillion addressable market through 2030. NVIDIA has a large revenue foundation, but analysts have been upping their forecasts for the company's revenue growth because of the attractive possibility in the AI data center industry and its estimated 80% market share. Given the rate at which data center expansion is anticipated to proceed, it won't be shocking to see NVIDIA's sales surpass consensus revenue projections after 3 years. It should come as no surprise that NVIDIA's earnings projections also increased. NVIDIA's stock price may rise to $248 if the company can generate $7.50 per share in fiscal 2028 and trades at 33 times profits at that time, in line with the tech-heavy NASDAQ 100 index. Compared to current levels, that would represent a 46% increase. The current price of this AI stock is 38 times its projected earnings. Because of the aforementioned factors, which may result in greater upside for investors, don't be shocked if it continues to command such a premium after 3 years. As of September 2nd, NVIDIA's stock has increased by almost 25% so far this year. Even while its price-to-earnings (PE) multiple of about 50 isn't low, considering how quickly the company is growing, it might not be all that costly. Additionally, it is trading at a forward PE multiple of 38 according to analyst expectations. The price of NVIDIA's stock has essentially come to represent the amount of growth that prospective investors anticipate in AI as a whole. Its valuation was momentarily harmed by news of the DeepSeek AI model and by news of tariffs in April, which had an impact on the stock market overall. Even at its current price, I think NVIDIA might still rise further and prove to be a wise investment given the strong demand for AI chips that is expected to develop. However, investors holding large gains would be quick to sell out if there are any worries or rumors that tech giants are reducing their AI efforts. This might result in a short-term decrease in NVIDIA's value. When may NVIDIA reach $5 trillion then? Given the immense potential of AI and its probable domination in the AI chip industry for the foreseeable future, I think it won't be long before NVIDIA reaches a $5 trillion market valuation. However, I don't think it will hit $5 trillion this year, or even in the upcoming year. It might take several years because the stock's high price and market turbulence from trade conflicts and tariffs may restrict its short-term gains. The stock's most recent earnings beat makes that evident. NVIDIA's stock hasn't been rising despite the company's outstanding performance and guidance. It is evident that investors are considering the long-term outlook, which includes its decreasing growth and future prospects. Although NVIDIA may face some difficulties in the near future, it still appears to be a wise investment in the long run. Investor bombshells are nothing new for NVIDIA. Those surprises are generally good, and its most recent statement is no exception. By the end of this year, the main four hyperscalers are estimated to spend $600 billion on data center capital expenditures, but by 2030, that amount is predicted to increase to $3 trillion to $4 trillion globally. We're still in the early stages of the AI weapons race, as evidenced by the significant growth in just 5 years. Even while this might seem like a crazy forecast, NVIDIA keeps in regular communication with its largest customers and is probably working with them to get ready to fulfill their anticipated demand in the years to come. As a result, NVIDIA has unmatched insight into the future of AI chips. Therefore, I think investors should pay attention to the company's forecast and think about the possible outcomes if it comes to pass. During its conference call, NVIDIA also revealed that it receives roughly 35% of the cost of building a data center. Therefore, it is reasonable to anticipate that NVIDIA would earn roughly $17.5 billion of the $50 billion that an AI hyperscaler plans to spend on data centers in 2026. That is a huge portion of the capital expenditure pie for the AI industry, which brings us to the next mind-numbing prediction. NVIDIA may generate between $1 trillion and $1.4 trillion in revenue annually by the end of the decade, if its forecast of $3 trillion to $4 trillion in annual AI infrastructure spending by 2030 comes to pass, and the company continues to absorb 35% of data center capital expenditures. This would be a tremendous accomplishment, given that Walmart and Amazon are presently the two biggest corporations in the world by revenue, with $685 billion and $670 billion respectively. Furthermore, NVIDIA's profit margins are among the highest, although neither of these two has a very large one. About half of every dollar of revenue that it records is turned into net income. NVIDIA's projected $1 trillion to $1.4 trillion in revenue translates into $500 billion to $700 billion in profit, assuming it can sustain a profit margin of about 50%. At this point, NVIDIA begins to set itself apart from the competition. With $115 billion in profits over the last 12 months, Alphabet currently leads all U.S.-listed companies in terms of profitability. Therefore, it would be an incredible accomplishment for NVIDIA to make $500 billion in earnings, and that's the lower end of the anticipated range. What effects may that have on the stock price, though? At the moment, NVIDIA's stock is trading at 38 times forward earnings and 49 times trailing profits. NVIDIA would be worth $34.3 trillion in 2030 if it were valued at 50 times trailing earnings and the $700 billion profit figure at the upper end of the projected range. NVIDIA is already the biggest firm in the world, with a market valuation of $4.2 trillion as of right now. But it would overshadow the rest of the market if its worth increased to $34 trillion. Along the way, long-term stockholders would also receive outstanding returns. NVIDIA would still be worth $15 trillion, more than 3.5 times its current market value, even if a more cautious approach were to assign the business a P/E ratio of 30 in 5 years and assume that it only reaches the lower end of this projected profit range. I continue to believe that NVIDIA's management has made extremely optimistic assumptions. Over the next 5 years, NVIDIA will still be a great investment, even if the market opportunity only ends up being half as large as it anticipated. NVIDIA is one of the best stocks to profit from the AI arms race, and it stands to gain the most from the vast amounts of AI infrastructure that are currently being built. In my opinion, NVIDIA will remain a market-dominating stock. Therefore, it would be prudent to invest now with the intention of sticking onto it for the long run. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Tell it.
If you look at the AI native companies, last year they did $2 billion altogether. The first year of AI revenues. The second year of AI revenues, $20 billion. Tenfold increase in 1 year.
Now let's take another look at data center sales versus gaming, but over time, going back to 2014. Notice how both lines track each other for years until data center in white suddenly rockets higher while gaming continues on roughly sideways. And by the way, those two lines go from solid to dotted at the right side of the chart, which represents estimates of future sales. What's clear is the gap between the two segments is only expected to grow wider as the pace of data center growth holds steady. And a quick aside, that's probably the number one risk to this stock. If data center growth slows down instead of keeping at its current pace. And here's the twist. AI is also boosting NVIDIA's gaming segment. And let's listen to Jensen again.
And now what's amazing is AI is coming back to revolutionize GeForce for gaming. And this last quarter, I think we had a record quarter for gaming between GeForce and Nintendo Switch.
Think of NVIDIA as AI infrastructure first and gaming second. And the feedback loop from AI makes gaming that much better. For investors, that means the biggest driver is still the data center engine, while gaming benefits from new GPUs and also hit titles. Now here's what to watch next for investors. For the data center, you got to keep tabs on the industry-wide spend on cloud AI, as well as the backlog. That's in addition to AI chip shipments and supply trying to keep up with that demand. And under gaming, watch out for new hit game releases along with new gaming chip launches, along with pricing. If cloud budgets keep expanding and shipments stay on schedule, the data center story has room to run. And if rivals press on price or if supply gets tight, watch those margins in NVIDIA. So in gaming, a strong holiday lineup or a new GPU cycle could easily give the franchise an extra lift. And bottom line, NVIDIA's reputation was built on gaming, but the story today is the AI factory. The charts show it, the orders confirm it, and the roadmap extends it.